Welcome back to 2 Cents Talk. If you've ever sold or traded crypto and wondered, wait, do I owe taxes on that? This video is for you. Today, we'll walk through exactly how to calculate your crypto capital gains, step by step, using simple whiteboard examples and real 2025 tax rates. Before we get started, make sure to subscribe to the channel, hit that like button, and share this video with anyone trying to make sense of crypto and taxes this year. Your support helps us keep creating easy, practical content to help you take control of your financial future. Understanding the basics. So what exactly are crypto capital gains? Every time you sell crypto for fiat, swap one token for another, or even use crypto to buy something, the IRS considers that a taxable event. That means you need to report the gain or loss, basically the difference between what you paid for the asset and what you received when you sold or exchanged it. For example, you bought one Ethereum for $1,500. Later, you sold it for $2,100. That's a $600 capital gain. Simple, right? But it gets trickier when you make many trades or hold assets over different time frames. Short-term versus long-term capital gains. Here's the big divide the IRS cares about: how long you held the asset. If you held your crypto for less than 12 months, that's a short-term gain, and it's taxed at your ordinary income rate, which can range from 10% to 37% in 2025. If you held it longer than a year, it's a long-term gain, which means a lower rate, 0%, 15%, or 20%, depending on your total income. So yes, holding your crypto longer doesn't just help your portfolio, it can also reduce your taxes. Let's break it down with a quick visual example. Imagine you bought Bitcoin at $20,000 in January 2023 and sold it in February 2025 for $30,000. Your capital gain is $10,000. Because you held it for over a year, this is a long-term gain. Let's say your long-term tax rate is 15%. That means you'll owe $1,500 to the IRS. But if you had sold that same Bitcoin within 6 months of buying it, your rate could have been 30% or more. That's a $3,000 tax bill instead. So yes, timing matters a lot. How to track cost basis. Your cost basis, or what you originally paid for your crypto, is the key number here. Every buy, sell, or swap affects it. For active traders, tracking cost basis manually can get messy fast. That's why most people use fintech tools like CoinLedger, Koinly, or Ledger, which automatically sync your wallets, calculate gains, and even generate IRS-ready tax forms. Many of these tools now use AI automation to detect staking rewards, NFT sales, and DeFi transactions that were often missed in previous years. Common mistakes to avoid. Let's go over a few common mistakes people make when calculating crypto taxes. Forgetting token-to-token swaps. Even if you never cashed out to dollars, swapping ETH for SOL counts as a taxable event. Mixing wallets. If you move assets between your own wallets, that's not taxable, but people often double count it. Ignoring losses. Losses can actually reduce your total taxes owed, so always report them. Not saving records. Keep exchange statements, transaction IDs, and screenshots in case of an IRS inquiry. The IRS is stepping up enforcement in 2025, especially with the new Form 1099-DA, which exchanges will send out automatically, so accuracy matters more than ever. Smart tools and AI help. Fintech is making crypto tax season a lot easier. Many apps now let you connect your Coinbase, Binance, or MetaMask wallets and categorize transactions instantly and preview your tax impact in real time. Some even integrate with AI accounting bots that can forecast your potential taxes before you sell, helping you plan your moves strategically. That's a game changer for both beginners and experienced traders. And that's how you calculate crypto capital gains in 2025, step by step. If this video helped clear things up, make sure to hit the like button, subscribe to 2 Cents Talk, and share it with your crypto friends who'll need it this tax season. Thank you for watching until the end. Check out our other videos on crypto taxes, fintech tools, and DeFi basics. They'll help you stay ahead of the curve and make smarter financial moves in the crypto world.